This is the Your Agent podcast, where Ren and Lauren get fit on finance, insurance, and teamwork. We will be covering topics with professionals from different industries to give our listeners the insight to be financially fit and motivate them through all walks of life. Special thanks to our friend Matt Pisani for his music in the background. You can go download free on all streaming platforms. This is the Your Agent podcast.
What's up, everybody? It's Ren, and I have my favorite friend right here, Tabetha Pradel.
Hello.
What's up?
Hi.
Okay, she's a little nervous, but it's all good.
I'm a little shy.
She's a little shy. But anyways, I have Tabetha here because what I did was I went on Facebook for the past few months, and I asked basically all my Facebook friends and Instagram friends, hey, I'm going to interview somebody on my podcast. What questions do you have on mortgages? And I was thinking about you to be on here because you know your stuff. And she is shy, which is fine, you know, but trust me, she is awesome and she knows her stuff. And she's someone that I could trust and Lauren could trust too. I think I'm just going to say it right here. 3 things about Tabetha. Well, she's a loan officer. She is also, fun fact, a boxer. Amateur boxer, right?
Yeah.
Okay, yeah. She didn't want me to share that. It is what it is. And obviously, she's a woman. So there you go. Boss lady status right here. So, I mean, how long have you been a mortgage officer? Loan officer. What's the right term again? I'm sorry.
The technical, my license is mortgage loan originator, but
Whoa.
I feel like loan officer is just more common. People
Salute.
understand. Yeah. People understand loan officer.
Right.
So.
And tell us about the boxer life.
Oh, sorry. And I've been doing this since 2018. You
Boom.
asked.
There it is.
So,
There it is. So,
2 years.
2 years now of experience. And then before that.
Before that, I sold cars for about 5 years.
That's what's up. So you've been in a very intense atmosphere.
Yeah, cars
you
was
need
very
tough skin.
intense.
You need tough skin.
Yeah.
You need to be ready to everybody just come at you hard, say you're a liar and all that stuff. Can you get the price lower? Is that the best you could do?
It's like abuse.
It's abuse.
Selling cars, honestly.
And, you know,
it was hard.
And you don't really see much, like, women in that field as well.
Mm-hmm. Yeah, it's definitely male dominated.
It's I can only imagine
and
what
I
it's
definitely
like.
had a lot of obstacles because clients would come in and see me and they would be like, oh, this little girl doesn't even, do you even know what a transmission is or things like that? And it would,
that's
yeah,
garbage.
I made it.
And they probably don't know either.
They don't, but at the end of the day, it comes down to, you know, just hearing them out on what they need.
Yeah.
And making sure that I give that to them. So it worked out. It was really good experience. I did really well. That's why I did it for 5 years. So.
No, that's what's up. Which dealerships? What kind of cars?
I sold Lexus most of the time. I worked
Love
at
it.
Yeah, Lexus is a great car. I worked at Lexus Massapequa, and they turned into Atlantic Lexus.
Okay.
And then I went to Lexus of Smithtown, which
nice.
is family owned and an awesome dealership. I stay in contact with everyone there. I sent anyone that I know. I also worked at BMW for a little bit.
Okay.
Went back to Lexus.
Yeah, no, Lexus of Smithtown, that's where my dad got all his Lexuses from. We had the LX, we had the GS, we had the
they
LS.
Don't make that anymore.
Yeah, I know. I love that GS though.
Yeah,
but it's funny because you're right. They are family over there. Because my dad would go in. He wanted to test drive the revamp of the IS 300, and I forgot whoever the owner is.
Dina Burns.
Okay, so I don't know anybody there. My dad does. All I remember is I dropped him off, and I'm following him, and they're like, "Oh, hey Jay, how you doing? What's up?" And he was like, "Yeah, I want to test drive that IS 300 for my son." This was back in 08 though. And they're like, "Yeah, you know where the keys are." And that was
Really?
Yeah, it was that relationship, you know. And obviously my dad would take the trucks and the cars there for service.
So he knows the drawer behind the reception.
Wherever
the keys
maybe
are.
we shouldn't tell the audience exactly where the keys are, but yeah, no, I'm literally just standing and watching because I'm so used to
delete that
some random kid coming in and some random guy giving us the dealer plates and all that stuff and sit in the car with us. No, he got the keys. He's like, "Come on, Ren, let's go."
That's what I used to do: get the dealer plates, get the keys.
Yeah, they didn't let him. They knew who he was. I think he just sent a lot of his friends there too. So,
but that's how it is there. It's very family oriented. It's really.
You don't see that a lot.
There. Yeah, I loved working there.
I have. Right now, I have one female that works for me. I used to have a few and whatnot, but right now she's young. She's 21, and whenever somebody calls the office, they want to speak to a licensed agent. and she is. Or they have a question, and they would literally say to her face, like, or over the phone now, well, can I just speak to Ren? Can I speak to someone else? Because you're just a secretary. And she's like, what? Like,
I used to get that when I sold cars. When
I
I
can
would
only
answer
imagine.
the phone,
Yeah.
and they would be like, can I talk to a salesperson? Because I guess my voice, I think I kind of sound like a kid a little bit. Like I didn't grow
I
up.
don't know. We got to hear this
But-
podcast later. See?
And they would always say, "Can I?" Oh, you're a salesperson. Oh, and they.
Yeah, it's like a shock.
I had one client come in, and I met them out on the parking lot, and they like made a joke at me because I was wearing like flats that day, and like I had my hair back. We were wearing polos, and she was like, Are you in high school? Like, did you even graduate high school yet? And I was like,
What is wrong with people?
yeah, but whatever, it happens. It sucks, but
What's even shocking is when women ask my staff member, like, oh, you're an agent?
Mhm.
And she's like, yeah,
it's
I
a little
am.
bit of an insult.
It definitely, no, I think it is,
But when like experiencing that over and over, it forced me to just like become super educated in the leasing, the numbers, how they get to the numbers, the product, and then once I talk about the product and they see how knowledgeable I am,
they're like,
it
oh shoot, she's
completely
legit.
changes, and they're like,
she's
oh.
legit. Oh my
Yeah.
gosh, she's legit.
Yeah.
Oh, I can't mess with her now.
So it forced me to be like extra professional and
Right.
just become very educated in whatever I'm doing, whether it's car sales or now mortgages.
Yeah, no, that's the same thing I think for many of us in our fields, like especially professional, like
Especially when you look young. Like
exactly.
all of us look young.
Yeah, they expect to like someone from that were born in the 50s to do exactly this.
Yeah.
They're like, oh, how long? They ask, how long have you been doing this for? And whether you say 1 year or 10 years, they're like, oh, not good enough.
Yeah, they're gonna judge.
Yeah, I'm like,
what are we gonna do?
It is what it is, honestly. So
you just gotta beat them with knowledge.
That's
and
it.
educate them. That's the only. I feel like that's the only way.
Yeah.
To win, you just.
That's it. And you said beat, so let's talk about that boxing life real quick. No. Come on.
I did it it was a charity event. That's what got me into boxing, and then
What kind of charity were you sponsoring
Fight for Charity.
And what were you?
Oh, my charity? It was
your charity.
Olivia Hope Foundation.
Okay, so tell us about that. Well, I know about that, but many people probably don't know.
Olivia, her name was Olivia Hope.
Yeah.
She was. It's a family that went to my friend's church, and my friend had told me about them before I even went into the Fight for Charity.
Right.
And Olivia was diagnosed with like a rare mutation of cancer.
Right.
And they didn't have enough research, and she passed away. And
she was young. I think like what, 10, 8, something.
Yeah.
Very.
She was really young. She was a baby.
Sad. Yeah.
And her mom made the foundation to
Shelley.
help. Yes. Yeah. To raise money to research
and
more about this.
Like
yes,
that,
more about this particular mutation, so that way they could help other kids. And they've raised a lot of money. I don't know where they're at right now, but back then I forget the number, but they raised a lot, of money. They sent out care packages. They help families. And
it was crazy how quick they boomed, basically. Mm-hmm. Yeah, no, and we were like the whole world was praying for Olivia at that point.
So did you go to that church? Or?
Yeah, Shelter Rock
Church. So you were
Church.
there. Yeah, so you were there when she was sick and they were praying for her in the church.
Before even that, So I saw the LaRusso family there too when I was doing youth ministry, and just seeing those transitions, it was just like just seeing everyone come together and pray and raise funds, and it was like a heart monitor, right? Or like the stock market, like you just see like everything's good, and then all of a sudden it went down a little bit. Like I remember one time, like they found a match, and I don't know, it's just God's timing is different for everybody.
They told me part of that story, and that was like part of it that was like gut wrenching. And as I'm doing research, like back when I first met them and I was picking them, they said that a bone marrow transplant is like the most painful thing that a person can go through next to death, and Olivia went through that, and it's just so strong. And for that other kids have to go through that. It's sad. It's sad. So I was honored to have them as my charity. They're an amazing family. I love them.
I still wear their T-shirt. It's so comfortable.
I have all the clothes too.
It's awesome.
It was a blessing meeting them through Fight for Charity.
They're awesome people. And so that's great that you raise funds and you participated. How did it feel to box professionally, amateur?
Amateur.
Okay.
Yeah.
How did it feel? Was it workout like crazy?
Yeah, it was. It was crazy. Boxing is the best workout in the world. It's so intense. People don't realize how intense it is. Like, you see a boxer, you see people fighting, and you don't realize how intense you're not gonna come in off the street and box and last one round. You're not. You need the conditioning for boxing is so intense.
You made it look easy when you were in the ring. And if you haven't seen the video, you could just look her up and all that stuff. Fight for Charity. Look that up.
That was nerves. That was nerves, and I zoned out everything. So it wasn't easy. It definitely was very nerve-wracking leading up to it.
Well, you did awesome. You know, you made it look easy. I mean, I did kickboxing with Lauren, and you're right. It looks easy, but it's totally not. And side note, thanks for the help with the wrist about, you know, how you told me to get the KT tape. That was the truth, because I was wearing a brace for like months. It didn't do anything. It didn't do anything. The KT tape.
Same thing happened with me.
In 1 week, done. My wrist is good. So
yeah.
So you have a lot of knowledge, and
knowledge comes with making
a lot
mistakes
of
and
mistakes,
accidents.
right? Trial and error.
So I've been through.
No, that's awesome, and that's why I want you on the show, because you know your stuff. You know, you helped me out. You helped some of my friends. I refer some of my clients to you. Whoever needs help, and I'm happy that a lot of people on social media was like, okay, yeah, I have these questions. And I think because of COVID, and we saw the rates are dropping low, so people could borrow money more.
Yeah.
And all that
being
stuff.
Being that the rates are lower,
yeah,
you're spending less on monthly on your interest. So the monthly that you're saving on interest, you can afford in a home.
Gotcha.
So that goes, you can afford a higher purchase price because you're not spending that money on interest.
Yeah, no, that's true. So that way you could own your home a little,
you can own you can own a more expensive home because your what you qualify for, rather than the amount that you qualify for, you're spending that money on interest. You're spending it on the actual price of the home.
Gotcha. Okay. So how does that? A lot of people went on unemployment, and there's a lot of people that are still collecting unemployment. You obviously need income. You need employment when you apply for a mortgage. How has it been with COVID?
How I've been handling it is, I'm still having everyone. At least I feel like it's very important to just at least let's have the conversation, because if whether you're furloughed or unemployed, you're going to go back to work.
Gotcha.
So maybe in the meantime, while we're waiting for you to return to work, there are other things we have to work on, like finding you down payment assistance. Maybe we have to work on your credit, and those things could take months.
Gotcha.
So don't wait until you go back to work and then start that. Because if repairing your credit or paying off debts is going to take 3 months, and we're waiting 3 months from now for you to go back to work, you're waiting 6 months.
You're just delaying the game.
Yeah, exactly. Definitely.
No, you're right.
It's almost like getting a health check. Like, even if we're not ready to move forward right now, and you don't even know if we're ready or not. I don't know, because everyone's situation is different. So we may be ready to move forward.
Gotcha. So it's unique to each individual.
Absolutely, yeah. Yeah, I would say let's just have the conversation, get it, like hash out all the details.
Right.
And then see where they stand.
Because they don't teach us stuff in school anyway. So.
No, because they could be ready in a month from now, or they could be ready in 3 months from now. But the sooner I have that conversation, the sooner we get to that.
Put them on the right path and get them their dream home and all that.
Yeah, there's so many things that there are so many factors involved. You can't get it on the internet. You have to, I have to have the conversation with them. Right. There's a ton of questions I have to ask to make sure that they'll be ready at the end of the day.
Gotcha. Yeah. I posted this one time a few times on my social media. I was like, don't confuse your Google search with my license. I feel like I
feel like I shared that post.
Yeah. A lot of people are like, can you make one for mortgage? Can you make one for real estate? I'm like, yeah, just do it yourself. Like, yeah, no, but it's true, because like, I think the laws are different, right? Especially with down payment assistance, right? Like in New York versus Texas, it's different opportunities, different grants, right? So
yeah,
Google doesn't tell you that.
County,
right? So there you go.
And there's so many different loan products where you could get down payment assistance on
that's
one,
why Lauren trusts you a lot. She was like,
it's too much for you guys to figure out. Yeah. Just come to me. I know the differences. I'll let you know which one you fit in.
So there's different types of mortgages.
Yeah.
Plain as, just like how you may have a Lexus, but what kind of Lexus? You may have a mortgage, but what kind of mortgage are we going for, you know?
Yeah.
So what types of mortgages are there? Like,
so...
Or I guess the most popular ones. The most popular ones.
So many for me to even go down the list. But I would say we have some mortgages that are more lenient on credit.
Okay.
There are some mortgages that are more lenient on employment gaps.
Cool.
There are some mortgages that are going to be better if you have great credit. There, we have so many different loan products. We have stuff for NYPD. We waive fees for NYPD.
Oh, good.
We have VA. We have conventional, FHA.
Awesome.
We have some I would say like special loan products that other companies don't have, where you can put a minimum down payment of 3% and not pay the private mortgage insurance.
Wow.
Which
otherwise known as PMI.
PMI.
Gotcha.
Yeah. Which on any other mortgage product, if you're putting less than 20% down, you have to pay private mortgage insurance.
Right.
So there's just so many for me to even go down the list. It really comes down to what the person is going to qualify for, if we can get it, and if it fits the property that they want to buy too.
True.
Because some of them are going to be, so if one product is more strict or more lenient on credit, maybe it's more strict on something else.
Okay.
So there's just too many moving factors.
Gotcha.
And it's
what
case
kind of
by
factors?
Case.
Gotcha. So what kind of factors do you need initially for someone to inquire about a mortgage?
They have to want to buy a house, honestly. Like,
okay.
If you are tired of renting,
you're right.
You
so
just
say they want to buy a
house
now.
And I'm gonna come up with a game plan.
Gotcha.
Yeah.
So what factors do you need? You need obviously their name and birthday.
Yes, I'm going to need their name, their birthday, their social employment information. I'm going to have to run a credit report, collect their income documents, pay stubs. If they're an hourly or salary employee, I'll need their pay stubs. If they're a business owner, I'm going to need their 1099s and their tax returns. But yeah, that's really all I need. It's not a lot.
That's pretty much it?
Yeah.
Gotcha.
That's easy. The two most important The two things that I'm looking for is employment and credit. So if you can prove to me that you've worked for the past 2 years, even if you had gaps, if you can show me pay stubs or W-2s or tax returns.
Show me the money.
Yeah. Just show me that you have a job.
Okay.
And if your credit, if you have an okay credit score, which even if you don't have an okay credit score, I still want to talk to you because we could work on improving your credit. Sometimes it's something small as far as like paying down a balance.
Right.
And people don't know this, and you can't always trust what you see on the internet.
Yeah.
I had a client just yesterday that said, she was like, "Oh, I got all my balances down to under 30%." Okay. 30% under 30% is good, but if you really want to see your scores go up, you want to see it like under 10%.
Gotcha.
And then she said, "My sister added me as an authorized user on a card that she just took out." I'm not a credit repair specialist,
right? But I don't think that's a good idea, though.
Authorized user, you want the longest length of history, not a credit card, because that actually hurt her credit because it brought down her length of history. Yeah. So people don't, you can't just trust everything on the internet. You need to talk to the people that are specialists and that are gonna point you in the right direction, because if not, you're just running in circles and you're wasting your own time and possibly wasting money.
Yeah, no, exactly. And I remember
losing opportunities, because the longer they wait, there's houses that are the pricing is changing, the rates. I hope they're this low forever.
What's the lowest rate you've seen so far?
I think it was like 2.375 the other day. I think I quoted. We didn't lock it that, but
no, but still.
Was it 2.375? I'm trying to remember. I have a screenshot on my phone if I could look at my phone, but
it's all right, I'll take your word
right
for it.
Right now, most of my purchases and refis are locked at 2.99 or lower.
Oh, that's amazing.
So everything, it's
basically free.
Yeah. And it is basically free. And I'm not a broker. Right. We're a direct lender, so I'm not charging origination fees to get that rate. I'm not charging broker fees or anything. What's
the difference between you and brokers then? Because I think a lot of people, they're like, okay, I'm going to apply for a mortgage. I'm going to talk to this person, and they're going to ask for name, address, social security, everything, the basic info, and then at the very end, I think all those fees and costs and everything like that. What's the difference between you and the broker, and then also, like, what should someone look out for to avoid all that? They should just talk to you at the end of the day. I think that's the real answer.
Yeah. So I would say a broker a broker is going to charge points. This is so a lot of my borrowers are like, oh, and how many points do I have to pay to get to that interest rate? You're not paying. I'm a direct lender. You're not paying any points. You're
what does that mean, points?
Points. So a broker will offer.
They even know
okay,
those
you
points.
can do. So yeah, I should explain that.
More points is better, or less points is better?
No, points is a charge. You're paying.
Gotcha.
So let's say your loan amount is $300,000.
Okay.
And you're paying 1 point. You're paying 1% of $300,000. That's a fee that you don't have to pay. You wouldn't pay that working with me.
Gotcha.
So I don't charge points to get you the interest rate.
Gotcha.
If you choose to say I want to buy down, I want to pay some prepaid interest, that's completely different.
That's
but it's
different. That's not your pocket.
Yeah, because so brokers will charge 1 point or 1.5% as their fee.
Okay.
I don't get paid through the client. The client doesn't pay me a point to do their loan.
So brokers could.
What
other points are there?
They have. I mean, we have just one bank fee, and it's $1,200.
And that makes sense.
That's it. That's all you pay.
But what about these guys? Where do they get their fees from? They make it up?
I can't say that. But yeah, paying an origination point, paying 1 point as their commission is they're just inflating the price to do their work, and they justify it by saying
it's kind of like a delivery fee when you buy a car. The car's in the lot,
but it's a couple $1,000s. Yeah, but it's a couple $1,000s when it's a mortgage. But that's how they get paid, and they justify it by saying, okay, your loan was hard work. But it's the same where it's silly, but I know brokers, and this.
I'm sorry, it's
2020
right now. Everything's on a computer.
Yeah, but usually like brokers will be for someone who couldn't qualify at a direct lender or a mortgage bank.
I guess they're like a substandard type,
like a self-employed borrower who shows no money on the books and has all cash.
Gotcha.
That
no credit.
No cash or no credit. They're gonna have to go through a broker.
That makes sense.
Because I need to show that you make money. I need to show that you have credit, and that's why you're gonna get like the cream of the crop products that I have, and that's why you're gonna get a 2.99 interest rate. But if you go through a broker, they're good for people that couldn't qualify, but your interest rate's going to be maybe like a whole point higher than what I'm going to give. So they're saving money when they're hiding money with their business, but now they're paying interest.
They're paying it back to somebody else now. Yeah, I know. I hear you.
It's almost like they back themselves into a corner.
Gotcha. Now back to the credit, right? I remember you shared with me a couple months ago between the 3 credit bureaus. Which one do you look at? So we pull a credit report. And we're going to pull 3. We're going to pull Equifax, TransUnion, and FICO. I'm sorry. No, not FICO. It's what? Equifax. Oh, Experian. Yeah. There we go.
And so we're going to pull the 3. We're not I think what you're talking about is that we're not we're not doing an average of your credit. People think we're taking all 3 scores and we're adding them up and then dividing it by 3. We're not doing that.
Gotcha.
So let's say you have a 750, a 700, and a 650. Okay. We're taking the middle score.
The middle one.
We're using the middle score.
Gotcha.
If there's 2 borrowers, you each have 3 scores. We look at the middle score for each borrower, and we automatically have to pick by the guidelines, we have to pick the lower one.
The lower one. So that's good to know. Yeah. So nobody knows that. Yeah. They don't share this on NerdWallet or anything like that on Google. But then
also, it's good for people to know, and then not good because people are looking at their Credit Karma and they're looking at these apps, and those credit scores are not accurate. So you really can't say
This is why we need to get our friend, the credit specialist.
She's gonna come.
She needs to be on here because I don't want to take too much of her time. But you have FICO score 8, you have Vantage score 3.0. They're all different games when it comes to mortgages, and people need to know this stuff.
She's so knowledgeable. She came to our office and did a presentation, and it was, she I think there's 60 different credit scores. Yeah, so when you look on your app, there's a different credit score than from when I pull it. Right. And people don't understand that, but you have a car credit score, you have a credit card credit score, you have all these different credit scores. But I also...
So just to recap, you go after the middle.
The middle score.
And if there's 2 people, you'll go to the lowest middle.
The lowest middle, yes.
Between the 2.
But then I also kind of don't even want clients to be so concerned about their credit score because your Credit Karma may say you have a 650, and then I may pull the credit, and you may have a 700.
Right, because it could be a different score.
Yeah, or so your Credit
like a different vendor that's pulling your info.
Your Credit Karma may tell you don't really qualify, but I can pull the report, and you did qualify.
Exactly.
So I don't even want people to judge by their Credit Karma
they should
or their
really
banking
just come
apps.
to you and talk to you.
Yeah.
Yeah, because all the banking apps are just showing whatever, It depends
Honestly,
on the
I don't know what they show, so I can't even say, but
that's why we need our friend. That's the last I'm gonna mention her.
It's never what I actually pull.
Mm-hmm.
It's never what I pull.
Yeah, I remember when you did it on me. It was, I was like,
it was
what?
higher when I pulled it.
It was a lot higher
than from what you saw on the app.
Exactly, and that just proves the point right there. Mm-hmm. So I'm gonna go through a couple more of these questions here. Is now a good time to refi? What is a refi, first of all?
A refinance is when you already have a mortgage, you have a home, and let's say, so you're going to pay off the old loan. The old loan is going to be completely paid out, and you're going to take out a new mortgage. The purpose of it would be either to get better terms as far as rate, or maybe shorten the term, or if you want to take out cash. So you could take out cash to update your bathroom, or you could take out cash to pay off. So one really good example of a cash out refi that would benefit the borrower is, let's say you have a credit card with an interest rate of like 15%. The interest rate right now is 2.99.
Yeah.
Cash out, pay that credit card off, put it in the loan. You just got rid of all that interest that you'd be paying for the next couple years.
I like that.
Or, you can make improvements on the home, or we could just lower the rate and just save on interest.
Gotcha. Okay.
And yes, right now I would say is literally the best time
to do a refi.
I can safely say in history, because the mortgage rates are literally at a historic low right now.
Yeah.
To refinance. It's insane how many people are refinancing.
You're like shaking your head right now. You're like, why wouldn't you do it, basically, right?
It's insane how many people are refinancing, and it's insane how many people I talk to that almost just say, I want to know what the rate is, and then they don't actually just take 10 minutes out to send the documents and sign it. Just take 10 minutes out to save it. They get busy, and they're comfortable.
It's a weird priority. Yeah, they're very comfortable. I'm like, you could literally save, like, what's the savings?
Example, I had someone just yesterday, and I was like, you're going to save $500 a month. In interest.
That's cruise money. That's cruise money.
And, I don't know.
And we ain't talking about Carnival Cruise either. We're talking about Royal Caribbean.
Or some people who just have the money and they just are comfortable and they're like, all right, I got to do this next month. Or people push it off. But yeah, refinance. This is
it's every industry. I'm in the same boat with all my clients. Not my clients, the prospects. We're saving you. Why wouldn't you move? Oh, I got to think about it. Oh, I got to talk to my wife. I got to talk to my husband. If I told Lauren, hey, we're going to save $500 a month if we just do the same thing just with somebody else, she's going to be like, why didn't you do it? I have a cell phone. You could have called me. Like,
there's $20 on the floor. Are you going to pick it up?
Thank you.
No, I got to think about it.
I gotta figure it out.
I got to think about it.
I got to check my feelings.
With my left hand or my right hand? I'm not sure yet.
I don't understand that. I don't understand that. Here, before we start making fun of other things, let's look at these questions right now. What percentage of the home value can I borrow on a conventional versus FHA loan? Does that make sense?
Yes, it does. But it's an odd way that they asked it.
Okay.
What they really want to know is how much is the down payment, because it's the same. So if you conventional, if you're borrowing 97%,
you just translated somebody's question just now, and it's in English too. You just proved that Google can't do anything.
So, what percentage of the home can I borrow? If conventional is 97%, that means you have to put 3% up front. You can't borrow the 3%. So, conventional, you can borrow 97% of the purchase price of the home.
Okay.
You have to put 3% down. FHA, it's 3.5% down, and you borrow 96.5%.
Nice.
VA, it's 100%.
Yeah.
You can borrow 100%.
I like that. I like we give back to the troops.
And what was I wanted to say something about this. Hold on. Completely slipped my mind. I wanted to give an example. So let's say conventional is 3% down, just to give people an idea of how much the down payment would be.
Right.
And the purchase price is $400,000. $12,000 down payment.
Gotcha.
But then you have the closing costs, which is a totally other question.
So what goes into closing costs then? Let's just dive right into that. I think that was question 10 or something.
So, closing costs are all the fees involved in the transaction, whether it's a purchase or a refinance.
Okay, so let's go with buying a home then.
Purchase.
What goes into a purchase, right? So what goes into a closing cost for a purchase?
Okay, the first thing I want to say is the closing costs are not fees that I charge.
Gotcha.
The closing costs are going to be determined by a couple different things. There are a lot of factors that go into it.
Mm-hmm.
But basically, the title report is going to give you the bulk of the closing costs.
Gotcha.
I don't provide the title report. A lot of people look at me and say, oh, can you beat these closing costs? I'm not going to tell you I'm going to beat closing costs because I would be lying.
Who handles title?
The attorney orders the title.
Gotcha.
So the two most important people working on your file are your attorney and your lender.
Gotcha. You and somebody else.
Yes.
Do you provide the attorney, or they you tell
pick
them?
Whoever they want.
Good.
I have someone that I work with that
Nice.
I trust, that she's super efficient and she responds fast. She's been doing it for a long time.
Right.
So I have someone that I trust.
Cool.
But the title report
they can use whoever they want.
Okay. That's a whole nother conversation. They have to use a real estate attorney.
Gotcha.
I can't tell you how many deals get messed up and delayed and the rate lock expires and then there's fees added on because they picked an attorney that was a family member or a friend of a friend and they thought they were getting a deal, or a union attorney, and that attorney doesn't know what they're how to proceed with the real estate transaction.
Right.
And it completely ruins everything. The attorney is meant to protect the borrower. So if you're using a union attorney or a friend of a friend and they don't know real estate law, how can they protect you in a real estate transaction? So that's a whole nother conversation that I could get into. But you were asking about closing costs.
You have to get a real estate attorney.
The attorney's job is to protect you. If they don't know real estate law, how are they going to protect you?
Okay.
That's it. I could go into further detail, but let's just talk about the closing costs.
Because a lot of people, they're like, okay, they do the math. All right, the down payment should be this, if they do 10%, right, or $400K, that's $10,000. They're like, okay, I should have put $10,000, but they don't realize, oh wait, there's more.
Closing costs.
So bam.
Closing
gotta
costs.
Get title.
The title.
What else?
The title report, title insurance, your attorney fee,
okay,
appraisal fee, your inspection.
Okay.
The escrow is the bulk of the closing costs.
What's escrow?
Escrow, to kind of say it in the most simple terms, escrow is like the middleman where you're going to hold your monthly taxes, your property taxes, and your homeowner's insurance if you have flood insurance, or that's where you're going to hold the money.
It's in a separate bank account, basically.
It's basically, a separate account.
Gotcha.
And you're going to pay your monthly property taxes in your payment, and when each payment you pay, you're putting money into escrow and money's coming out. So you have to pay, it depends on where you buy, but you could be putting between 2 to 8 months of property taxes in escrow. So if I'm calculating your closing costs, I'm not going to calculate the lowest amount where 2 months into escrow. I'm going to calculate 8 months. And at the end of the day, when title report comes in, hopefully it's 2 months and you saved in the closing costs.
Gotcha.
You didn't have to pay it.
Okay.
But closing costs is escrow, and it's all of these fees put together, which I don't charge. I have the one bank fee, $1,200, and that's it.
Yeah.
But the attorney really should be going over the closing costs with the borrowers at contract signing and go over it line by line.
Gotcha.
In detail. I go over it anyway, but I don't produce the fees. The attorney does, so...
It's better the attorney has to do all that.
Yeah, exactly.
Has to disclose all that too. That makes sense. But you help because you're knowledgeable.
Yeah, I do put it. We do have to put it in the loan estimate, so I do end up going over closing costs with them too.
Gotcha. Okay. Here's another question then. How can I prepare my home to get the maximum appraisal?
I've heard clients painting, taking care of little odds and ends. You definitely don't want the house to be cluttered.
Right.
That's going to help with the value of the appraisal. You definitely want it to go smoothly. But at the end of the day, the appraisers are really looking for health and safety issues. So if there's a leak in the ceiling, they're looking for cracks in the wall. They're looking for...
Just an updated house, whether it's modern or not, right?
Just make sure the house is safe.
Okay.
There's no health issues. no missing shingles.
Gotcha.
You know, like you're not. The house should look.
It's not a shed. It's not enough.
Make it presentable.
Yeah. Right.
I would say declutter so the appraisal can actually see the property. You know.
Don't give them a reason to.
I would I
Gotcha.
would say that just like thinking.
Right.
If you have a lot of clutter, you have things in the way, it's going to make them want to look further and say, why is this here? And they're going to want to look further. But I would say, for the most part, the appraisals go pretty smoothly. I never really have problems. Sometimes
should they
a couple
update
things,
their house? Like, if they had a, like...
It depends.
Right.
Usually, the agent is pricing the property depending on whether it's updated or not.
Gotcha.
So, the price... and the value of the home should be...
There's so many factors in that alone. I mean, the zip code and where it's located, how big and all that.
The agent should be telling them what the price of the home is.
So let them talk to an agent then.
Yeah,
that would be the best bet.
Yeah.
Gotcha.
I would say that because the agent is going to look up the comps in the area, and that's going to be something the appraisal company is going to be looking at too.
True.
So if for some reason the appraisal comes back short and it's shorter than what's in contract, the agent can actually pull up comps and try to kind of dispute it and get the value up.
Give a reason why the value should be
so
the way it is.
If the 3 houses around it are a certain price and that's what's in the appraisal and we need the value to be a little bit higher, that agent might find three properties in the same vicinity that are a little bit higher, and the appraisal company
I love how you know so much about this, because this is not even real estate. You know, you're not in real estate as much. You dealt with it so much. You know, it's kind of like with me. Everyone calls me and they're like, you know, hey, I got a question. If I take my car to, to the shop and they need to do X, Y, Z, and I'm like, I actually know it, but I'm not a mechanic.
Yeah,
I just know
have
from
no
experience.
authority here.
Hey, what do I do with DMV? Let me go on DMV.com.gov or something. Let me help you out.
Sometimes I do that too.
I'm like, and I tell them, like, I just want to let you know, like, I understand why you may think I could help you, but I'm not DMV. You know, it's just, I don't know. I think it's just trial by fire, honestly. You know,
try to be helpful when they have a question. You don't want to just say, nope, can't help you. Good luck. You still want to
and I think that's why the referral game is so important, and that's why people trust you, trust me with all this, because we do our homework and all that stuff.
Yesterday I was calling like the town up in, I think it's Ulster County, or Dutchess County, to try to get my client a grant. It's not something she should be doing, but she's a single mom with 3 kids, and I'm not gonna say, "Oh, here's the link, figure it out." I'm gonna call because she's kind of clueless in it, and I have more knowledge.
And you know, exactly. You know what to say.
Yeah.
No, I hear you. I do the same thing on my side too, and I think it just makes your clients become more like family. You know?
Yeah, they definitely appreciate it.
Absolutely. So wait, you said something that I'm trying to remember. Oh yeah, the grants. What are you talking about grants? What is that about?
So not each town, but certain towns will give you a first-time home buyer grant. Okay. And it ranges. I've seen some at $20,000, some at $15,000.
Oh wow.
And you just have to go and apply. Usually, what they're looking for is that you make under a certain amount of money per your household.
Gotcha.
So,
is it forgivable? Is it
these grants?
Yeah.
Usually, when it's from the town, they're forgivable, but you have to live in the house for 10 years.
Gotcha.
So if you move out ahead of time, you may have to pay a portion of the grant back.
It's like a prorated
But the
difference.
reason is they're not going to, the government isn't going to give you money to buy a house, sell it, take the $10,000, and then move somewhere else and get another grant. They're trying to prevent that.
They're a little smarter than that.
And I think the purpose of the grants is to keep people living, in that town. So they don't want to see you just get the money and move out.
Gotcha.
But
and then you say towns. Can you get multiple grants then? Like, can you get one from the town and then from like New York State and layer it together?
Yeah.
Really?
You can.
Okay. Like Sony MA. What is that about?
Sony May, State of New York Mortgage Agency. So you can do a Sony May loan, and you can marry that with, there's one that's open. I know Babylon is open right now. Right. For a grant, so you can get 3% up to $15,000 through Sony May, and you could get, if you get the full $20,000, you can get $20,000. So you have the potential to get $20,000 from the town of Babylon, and then $15,000 from Sony May.
And $35,000 just goes right towards the down payment. Yeah. Can you use that towards
closing costs and down payment?
Really?
Yeah. Wow. You still have to come up with your own money.
Right. You still got to show that you make money and all that stuff.
With Sony May, you have to have at least 1% from your own personal bank account. So if the purchase
to put
price
towards it.
Yeah,
Gotcha.
they have to. And some of the grants will say they want to see $3,000 of your own down payment.
Gotcha.
You know, it's hard to tell you the details because each town is going to have their own
There's no
regulations.
blanket again. That's why they have to talk to you. They can't go on Google.com.
Exactly.
I love that. This is like the theme. You can't just go online.
There's no point to eat. You're gonna be chasing your tail looking online because you're not gonna be able to get all the details.
Right.
Like just come to the source. You know.
Yeah, exactly.
Save yourself the trouble.
Now there's this one question that we already answered. Like, what are deciding factors for loan approval? Credit score, asset debt ratio, otherwise known as DTI. I think people need to know what DTI is.
Mm-hmm. What was you said? You want people to know what DTI is?
Yeah.
I do and I don't because
okay.
I kind of don't want no I don't want people to try to figure out their own DTI because they may be doing it wrong because there's factors that they don't know about, like student loans, things that may or may not show up on the credit report. I have to go by what's on your credit report.
Gotcha.
And so there are too many factors that move for people to, I feel like, to calculate their own DTI.
Yeah, I don't think they should do it. You should do it.
Yes.
So DTI stands for debt to income ratio for everybody that's listening.
Mm-hmm. And this is how we qualify you. So let's say
if you make $100K but your debt's $100K,
you don't qualify.
You're not making a profit there. You know.
Yeah. If you're making $80,000 a year and you have $1,000 payment on your student loans and a $500 credit card minimum payment or a car payment
right there a month there, that ain't gonna work. But maybe, because you know so much stuff.
Yeah, exactly. So I wouldn't want them to do their own debt to income ratio because they may be counting things in their debt that don't show on their credit report.
They may even fudge up the numbers to make them feel good, too.
Yeah. No, they may be counting something that won't actually show, and then they think they don't qualify. So I don't even want people to do it on their own.
No, but I think it's good to at least acknowledge, okay, make money and have little to no debt.
Yes,
and you would have a better chance of owning a home.
Yeah, but even in that, when it comes to debt, I also don't want them to think that they should pay everything off because that may not even help. They may be able to use that. So I don't even want them to try to do it on their own.
To talk about credit repair, and that's why we had Matt Pisani that talked about how to budget. He came on the show before, and he just talked about how to budget, literally. Because if last thing you want is to buy a house, you have a mortgage, and you don't know how to control your finances, and now you default.
I'm not closing any loans that I think you're going to foreclose.
Yeah, no,
you're going to default.
And I like that. You can't sleep
that's
well
the whole
at
point
night.
of my license.
Yeah, no.
To make sure that people aren't defaulting on loans.
I just I actually had to turn away some prospects where it's like they wanted certain coverages that I personally don't allow in my office. And I tell them, look, if I give you this, I would lose sleep knowing that you have, and I'll say it like, terrible coverage. You know, you get into an accident, you're gonna literally wish that you had the coverage I recommend because now you're getting sued, you lost your home and everything like that. You're done, you know. And I tell them, go to ABC Company, not me. So let's see what other questions we got here. This one's interesting. What's the standard legal retainer fee for a purchase? Is that the right terminology for you? What is that? I don't even know.
Standard legal retainer fee. What's
going on with these people?
I want to say that I don't know why they're saying legal retainer.
Maybe illegal? Maybe there's an illegal one?
Maybe they mean the deposit at contract signing.
Could be.
Standard
what does
legal
that mean,
retainer. Then? Well, you have a down payment.
Okay.
So your down payment could be 10%. You're not going to put your 10% down when you sign the contract. But when you go to sign the contract, you do have to put money down that is saying that you're buying the property, right? So I usually see like maybe $10,000 down. It depends on how much they're putting down. Some people want to do their whole down payment.
Gotcha.
But I honestly can't answer that because
it's not.
That's determined by the attorney. So
gotcha.
And also maybe the seller's attorney may say, oh no,
$3,000
at deposit at contract signing isn't good enough.
No, that makes sense.
That's between the attorneys.
Yeah. I want to go back on when you're buying a house, right? It's closing costs and down payment.
Yes.
Right. Is there the closing costs? We already mentioned what goes into it. Is it a percentage to figure it out?
I always tell everyone to round up. Okay. And I would say
from what? Like, say you're buying a $400,000 home.
So I could give a range of 3 to 6%. Gotcha. I would, but it's rarely ever 6%
of the
purchase price.
So
I would say just round up to 5%.
The highest.
And then if I'd rather you be over prepared than short at closing.
Oh yeah, definitely.
So if the purchase price is $300,000 and we're just putting aside 5% for closing costs and it's $15,000, but let's say at the end of the day the closing disclosure says your closing costs are $10,000, then you had the
better.
money.
It's easy.
At least you had the 15 and you were prepared versus, oh my God, the closing costs are actually $15K and I only have $10K.
Right. Hey, Dad, can you wire me some?
Yeah, and then we have to go through that, and then there's delays in the closing. So I tell everyone I have a routine.
You know your math because you just 305% equals this and that. Either you know your math or you've been closing a lot and you just know.
I have this conversation so many times every day with referrals, so and I have to go through all of this with them. So yeah, I kind of just use the same examples.
I love it, and you've been doing this since 2018, so it's just but you. It's that's not that the thing. Long, it's not 2 years. Yeah, but
do it so often that.
Right, not known of you at least on social media, and then we talk and whatnot. 2 years, but we're talking not. It's not like you're working 5 hours a day. You're like 24/7.
Yeah.
Boss lady, So we got people need to understand that, Here's his other question here. Can I get a copy of my credit report so I can shop around without having to run multiple hard inquiries for each application?
No, there's no shopping around.
Yeah.
No, I'm kidding. I'm totally kidding.
If you're talking to Tab, you can't shop around. Hey,
I'm kidding.
It's the same thing.
No. Yeah, no, I definitely want everyone to feel
We have to get our friend for this one. This is a credit. This is a credit talk right here.
There actually is a window where you can.
You can do multiple, right?
There's a window. I forgot how many days. Yes,
30
exactly.
or 60?
I think it's like 4 days.
4 days.
But yeah, I could.
Okay.
I could give them their credit report and they could go shopping with it.
Right. Doesn't make sense though.
But
what are you trying to do?
At the end of the day,
everybody uses
I want
different
them
things,
to
right?
feel. Yeah, at the end of the day, I want them to feel comfortable, and I'm confident in my rate and my term.
Yeah.
So if they have to go and shop around, then that's fine.
Yeah, I feel like that's like.
They're scared. They want to make sure they're getting the best deal. So if they feel like they have to shop around, that's fine. I'd rather give them the credit report and not have a bunch of inquiries. I actually tell all my clients, like, once I do the pre-approval and I run your credit, I want them to actually lock their credit report. I don't want any mistakes, nothing to happen.
I just opened up a Discover card.
Yeah, I go through all of that with them. Yeah, I go through all of that with them in the first conversation because I'm not having them make any mistakes during the process.
That's great because I'm looking at these questions here. It's funny. Can I quit my job while waiting for my closing? And can I open a credit card while waiting for my closing? And I'm just going to add some more questions here. Can I buy a car? Can I get another job? Can I lose a job?
Why would someone ask, can I quit my job? Waiting for number one. How are you going to pay your mortgage?
You were born in Queens.
I'm so
you live in New York your whole life. We have seen so much weird things in this place. All right, just the past 10 years has been weird.
Okay, no, you cannot quit your job.
No,
if you quit your job, you're going to be denied, and you could.
How would they know? How would they know?
We verify employment the day before we close.
So they got you.
And and. If you quit your job, you are going to lose your deposit. So whatever you put at contract signing.
Deposit's part of the closing costs?
No, the deposit at contract signing.
Oh, so that's something different.
Yeah. So remember the question was the retainer?
Oh, that's that.
Yeah. Okay. So let's say you go to contract and you put $10,000 down and you are just a loose cannon and you say, you know what, I'm quitting my job. I don't need this. I'm buying the house. I'm moving. I'm going to get a new job, whatever. The contract could state that you lose your deposit if you can't get the mortgage. So you lose your $10,000. You really,
let's see. You lose your job, your salary, and then you lost $10,000 off the bat.
Yeah, and you're going backwards.
Why?
I don't know why they would say that.
It's a good question.
It is. And this is something I go over with everybody.
Because maybe somebody is working and they're not happy where they are. And they really want to switch, and maybe something happened. That could happen.
And this is what
I mean, I would believe someone would be like, I'm going to quit. Like what you said, I'm going to quit and just live in my own home and forever, But I think maybe that question's from someone who's like.
So what I go over with everyone in the first conversation is employment and credit. Employment and credit are the two most important factors when you're getting pre-approved when you're getting a mortgage. So we want to see consistent employment for the past 2 years. We want to see if you're an hourly.
2 years.
If you're an hourly worker, we want to see consistent hours. I can't see 15 hours one week, 40 hours another week.
15, 20. You gotta be steady.
I go over this with all of them, and I tell them, don't get fired, don't switch jobs, don't quit your job.
What if they take up another job on top of that?
If they're going to take up a part-time job, unless they've been working part-time for those whole 2 years, I can't use it because it's not guaranteed income going forward.
Gotcha.
So I do go over that with everyone. Keep it consistent at your job. Do not quit. Do not move. Don't do anything.
Gotcha. So even just getting another job
we're going to
bring in more money would not even help.
A couple times during the mortgage process because the verification of employment expires. So just like, and the credit report expires. So
how many days?
The processor does that. Honestly, I don't know how many days off the top of my head.
I think it's like, 45 days, 30 days, 60 days?
I think it's shorter than
like
45 days.
Really? Okay.
Yeah, I don't remember off the top of my head, but we have to verify it. So yeah, stay at your job. Do not make any moves. Don't get another job.
There's
no point to get another job because I can't use the income. If you want to get another job so you can have some more money for the down payment or something or just have cash for furniture or have cash, then that's completely different. But I can't use it to qualify you for more. Would that be fine, though? Yeah, they could get another job.
But that would be fine. Okay.
Yeah, but I won't be able to use that as qualifying income.
Gotcha. Okay.
They won't get a better term.
A lot of people don't realize that when you buy a house, you got to put stuff in the house.
I know, right?
That's a whole nother paycheck right there. That's a whole nother salary, Like...
What was the other question? Silly question.
Can I open up a credit card during closing?
No. I talk to...
It's back to the age of new credit, right? Another hit, right?
So I go over this with everyone in the first conversation also when it comes to credit. Do not open up a new credit card and all the cards, any new line of credit. And all the cards or installment loans or car payments or anything, make sure it's on auto pay because one late payment could drop your score by like 90 points.
Because you're verifying this like almost daily now when you're in that process, right?
I go over this with everyone in the first conversation because I don't want them to make any mistakes and then down the line when they're already in contract, they already put the deposit down and that deposit's at risk, they get denied. So don't open up any credit. Do not, once I run your credit, until we close, do not touch your credit.
Don't even close out even, right?
Exactly.
Some people want to close out credit cards because they're done.
Don't close them out because that could be your card that has the longest length of history and that's making your scores high.
Right.
And then you lose that length of history when you close it out. So just don't touch your credit until we close. You want to...
Doesn't matter how shiny the card is.
Yeah.
What kind of metal it's made out of.
Or what offer they give you.
But they give you $1,000 if I spend $10K in 1 month, though.
I know.
So
don't.
Stupid.
And that's why sometimes I tell them to just freeze their credit during because
a lot of these apps, you could actually just hit lock and boom, done. That's it. No problems, no questions. So that's good. All right. And then... MIP? What's that?
Mortgage insurance.
Mortgage insurance.
PMI, MIP.
PMI. What's MIP?
What is
the P for that? For MIP? Mortgage insurance?
Premium.
Premium?
Yeah.
Okay.
And then...
I thought that was a typo. I'm like, PMI, they mean. No. Okay.
No, yeah. MIP and PMI is the same thing. That's mortgage insurance. And that's if you're putting less than 20% down, you're paying mortgage insurance and it's separate from homeowner's insurance, which...
That's
what you're familiar with.
Yep.
So homeowners insurance protects their home. Mortgage insurance is going to protect the bank in case you foreclose because you're putting such a small amount down, which is less than 20%.
Gotcha.
And I have
they charge for that premium, the bank.
It's monthly, yeah. So I have some loan products that are much more lenient on mortgage insurance, and then I have other loan products where you can put less than 20% down and not pay mortgage insurance.
Gotcha.
But you have to qualify for those. So.
Gotcha.
So there's, different factors and guidelines.
What's the benefit of having PMI?
There's no benefit.
There's no benefit.
There's
really
no
just
benefit.
For the bank.
It protects the bank in case you...
Right.
So it's meant
like another 2008, 2009 scenario, the bank doesn't have to worry about that.
Exactly.
Really.
So it's meant to recoup money in case that borrower defaults on the loan. So let's say they're collecting $200 a month. That money is going towards them.
That insurance
in case
policy,
that
basically.
In case that client who put less down defaults because they're going to lose money when they default.
Right.
So it's meant to recoup the money that they're lending.
Gotcha. All right. That was a quick question. That was easy. And then I think that's pretty much it. I mean, we have this one question. If I buy a house with a mortgage, will you pay for it? I think that person was trying to be funny. No.
I'm gonna fight that guy.
I'll fight that guy, the Pitbull. Pitbull. Your nickname was Pitbull in that boxing ring, right?
Yeah, that's what my mom calls me.
That's what your mom... Oh, that's nice.
No,
so.
it's not for a nice reason.
Pitbulls are... Oh, okay. I mean, Pitbulls are nice. My father-in-law has a Pitbull. It's a beautiful little dog.
Yeah. I do. I love that.
I think that's it. I mean, is there anything else that people need to know when it comes to applying for a mortgage, what to look for? I think if we have to recap it, when is somebody ready to buy a home?
I would say the only thing they need to know is that they don't know anything.
No. I think a clean slate is better. The person's a know-it-all.
Exactly.
Unless they're licensed, unless they're like you.
The most important, I feel like they don't go by what you see online.
Mm-hmm.
You know, don't try to make your own conclusions.
Mm-hmm.
The guidelines change per product, so you may think you're not ready, but you may be ready. So there's no point to even we got to have the conversation.
Gotcha. Okay.
Have the conversation. If they're not ready right now, there's a game plan. They'll be ready within.
What makes someone feel like they're ready to have that conversation with you, to start that conversation?
I feel like most of the time it's that they're just sick of paying rent, because I feel like the rent in New York is equal to what I'm seeing on my mortgage payments for my borrowers.
More, honestly. It's more. Definitely more.
I think people just get tired, because I notice it's when people, like, their leases are up and they have to put, because you have to put like 2 months and a security deposit, first month, last month, and a security deposit down. Yeah. So if your rent is $2,500 times 3 is what? How much? $7,500.
Right there.
That's almost your down payment right there.
Right.
And you're going to be paying the same thing per month.
Right.
So I feel like that in most cases, my clients
and they're still doing a credit check on them. They're still asking for W-2s.
Exactly.
They're still doing your process, but they're paying for someone else's mortgage. But you don't own it. Exactly. Now, oh wow, I was going to go into a whole different topic. I was like, well, there are things about owning a home, right? You got to, all the maintenance you have to come with, but that is not our field.
But, but owning the home, you are paying a lot, but you're almost
owning it. It's yours.
But you're not. It's almost like you're paying it into a bank account, because at the end of the day, you own the property and you could sell it, and all that money's your money again.
True.
So, and in New York, the values are going up. Yeah. Every year, I do refinances.
Well, you had to whisper that like it was a secret.
I didn't mean to whisper it. The value's constantly going up, so that bank account, if you look at it as your property as a bank account, it's constantly growing. Gotcha.
So, if somebody contacts you to inquire about getting a mortgage for a first-time home buyer, or maybe just a refi and all that, how long should they set aside to talk to you? Should they call out for the day and talk to you, or is like an hour? Should they involve their spouse?
Yes. Okay. So what I usually do is, because it's too many steps in the process. Mm-hmm. It's too much information to give them in the first conversation. So what I usually do is, like, the first conversation, I want to go over the things that you shouldn't be doing, like changing jobs and opening up credit and everything. Give me like 20 minutes to a half hour. Let's just talk about what's directly in front of us. Talk about how I'm going to get you approved. And then while you're out shopping, we're going to be talking, because the client's going to be out shopping. They're going to need to know their monthly payment for the property before they even go and see it. So we're going to be talking. I'll be answering questions here and there. Once they are in contract, it's a whole nother conversation. Gotcha. So that's another half hour.
It's a few.
Yeah, I have to go over
meetups.
Everything. Yes.
Yeah.
Well, now it's, everything is over the phone, really. Yeah. There's no reason for them to.
You could do it over phone. You could FaceTime, Zoom, right?
It could be Zoom, or it could be over the phone. Gotcha. I could meet with them, but you're just spending time driving just to hear the same thing over the phone.
Right, exactly.
But I break it up
into... Save gas, why not?
I break it up into, like, steps,
So that way they feel comfortable.
Well, you're not going to... If I told you what's going to happen at the closing, you're not going to remember that in the first conversation.
Right.
If I tell you, how I lock your interest rate, how I get to your interest rate... You're not going to remember that in the first, and it's going to be a 2-hour conversation. So we just take it step by step.
Right. And you also have to pray that they don't know everything.
Whether they know it or not.
I mean that like in a nice way, because I dealt with people, well, I've seen this on Zillow, and this is what Zillow is saying, and this is what Trulia is saying, and you're wrong. And I'm like, I'm not wrong. Like, you know, like, what?
I don't really
but you said
that.
It's okay, that's good.
I don't get that with clients. It's kind of on my end, my process is to them it's so foreign and confusing that I rarely get any like pushback.
Good.
You know, I'm really just educating them because they're just totally lost. There's no.
They don't teach stuff in school.
And you can't really get the answers on the internet, and then you know what's on the internet isn't always specifically what's in the guidelines. So it's just. It's hard for them to really know. And you
need a pre-approval when you look at houses too, right?
Yeah.
Why is that important? What is a pre-approval? Like, why does somebody need to know that?
So, no one is going to allow you in their home if you can't afford to buy the home. So, if I'm selling a home, you're not coming into my property to view it. You're not wasting a half hour of my time. The agent isn't going to allow you in unless
That's like the first question to ask. Like, if they're selling a house for $800, right? And you get pre-approved for like $300.
No way.
You shouldn't be even looking at that house for $800, right?
That's the whole point of pre-approval.
I just want people to understand that. Right? So you posted on your Instagram pre-approval versus
pre-qual?
Yeah. What are the
pre-qual is just looking at your numbers, just like crunching numbers. A pre-approval, I actually run the credit report. I collect all of the documents. I take the entire file and I run it through Desktop Underwriter, which is an automated system that tells me if you're approved or not at the end of the day. You still have to go through the process, but it's just an extra step that we take. And I'm going to know if you're going to get approved. So
it's a better idea to know where you are when it comes to pre-approval versus pre-qualification. Most
lenders will do, you've heard of the commitment letter? Do you know what stage the commitment letter is? Most lenders run DU and have an underwriter look at the file.
What's DU?
Desktop Underwriter.
Gotcha.
In the middle of the process. I do all of that before they're even out looking.
Gotcha.
So that's the difference between pre-approval or my pre-approval and a pre-qual. Pre-qual is just almost basically like using a calculator to see how much. It's looking at your debt to income with a calculator. You're not running credit or verifying anything.
It's wishful thinking. Almost.
You're...
I forgot what you posted. Pointless. It was so good. It was like pre-qual is like 10% done. Pre-approval is like 90% done.
Exactly.
I think that's what it was.
Yeah.
Okay. All right.
It's same thing as like I don't even want people to calculate their own DTI.
Yeah.
Because
they don't know what goes into pointless. A DTI. Right.
Same thing with the pre-qual. It's pointless. I don't know how.
Why does it even exist? Right.
It's pointless.
For them. For you.
You can't go anywhere with it.
Gotcha. All right, so I think we answered everything. I think we got everything down. Is there anything else that you want people to know about anything? I don't know.
To know about anything? I don't know. I want them
to
know
mortgages,
about Jesus.
Obviously, truth, the way to light. You know, there it is. You know, John 3:16.
No, as far as mortgages, I mean, there's so many moving factors. And everyone's situation is different. We need to, talk and hash everything out.
Gotcha.
It's case by case. It's not. Okay. There's no general statement that I could give.
Renters should definitely talk to you.
Yeah.
Gotcha.
Yeah.
And then people that are living with their mom and dads, they should still talk to you to at least get an idea of how to.
And mom and dads that want to get your kids out, you should give your kids information.
Give everyone a tab. Give them Tab's number, and we'll get their kids out. 1, 2, 3, done. Okay. Well, hey, thanks for being on the show. Thanks for everything. Thanks for Rob Taramina for helping us out with this. And if you guys have any questions, check out the comments for the links to reach out to Tabetha and reach out to myself. And for any other questions you may have, just reach out again. You guys have a great day. Take care.
I'm ready for a new way, ready for a new day. I'm ready to go.